Welcome everyone this afternoon on a webinar where we're going to talk about cash flow, how we can keep an eye on our cash flow. I'll go through the Xero reporting that is available and also what else you can do over and above what's already available for cash flow reporting. Beautiful. Before we get started onto the real deal, I'll talk a little bit about myself. My name is Neha. I run a bookkeeping and training business called Sum and Substance, where we lay a lot of stress on automation, efficiency, reporting, making sure the compliance is done in timely manner, and train on a lot of softwares, accounting softwares. Also run future-proof accountants, where we assist accounting firms in embracing the cloud technology. I'm CPA and BAS agent myself and work very closely with Xero, MyOb, Workflow Max, and super passionate about systems, as I was talking about. So what are we going to talk about today? We're going to talk about cash and its importance and how do we manage it best. We all know that, but I'll just add a few things which you probably already know, but it's a nice little reminder. Then we'll talk about what automation is already available and what are the prerequisites to make sure that automation works correctly. And then what is the reporting available in Xero? What I haven't put in there is I will be sharing a spreadsheet as well, which can contain data straight from Xero, but it will be less cumbersome. Okay, that's a promise. Cool. So when we talk about cash and its importance, of course, we want to be able to make sure that we are able to see the cash flow statement and do some kind of cash flow forecasting each month, right? You either do it each month for the following month, and that's normal, or you can do it for 3 months, right? So each quarter, which will help you plan your expenses and income and cash flow in a manner which is more proactive rather than reactive. The benefit of anything like that, and we'll talk about the reporting in detail in about 5-10 minutes. It is important and it is good to do such things on an ongoing basis. The benefit of that is obviously, if you think that you have to get an overdraft, worst come worst scenario or loan for the business just to get through this time, you can then get some options, right? But if you do it reactively, chances are we can make wrong decisions. That's for anyone, right? What are the things that you can do to make your, whatever situation you are in your business, how can you improve your cash flow with what's available to you? So first of all, making it easier to pay for clients to pay. A lot of times we see, and this is not just for my own practice, but this is across all my clients as well. The clients who make it easier, who give clients more options to pay, whether it be a retainer, whether it be subscription, whether it be once-off sale, if you can have that pay now button where people can just put their credit card details, earn some points, they love it. It's just so much easier to pay that way, right? If you can offer direct debit, I know sometimes we can all be a little bit apprehensive about attaching a direct debit form to the client, but you'd be surprised. I mean, I was the same. You'd be surprised how many clients are like, oh, thank God, that's one less thing to do. And then the direct debit can be set up in a way that they sign it up. They say, anytime you invoice by the due date, you take money from my account. So that's all automated, right? So anything like that, any way you can make it easier for your clients to pay, to make it easy for them to pay, and they will pay in time. Then making a process for paying to suppliers. This is another big problem, actually, which I see very commonly with a lot of business owners. The bills, again, get paid reactively rather than proactively. So rather than having like a system in place about when to pay suppliers, ATO, and everyone, people normally they'll get an invoice, they'll pay it straight away, or they'll put it in the filing pile, they'll pay when they can, type thing, right? So obviously, if your cash flow allows, the best thing is, again, depending on how many bills you get in your business, best thing is to phase it out. Like, you don't have to pay before due date. A lot of businesses end up having a cash flow problem because they pay straight away. Sometimes you'll have 30 days to pay. Why do you want to pay it now, right? So just if you are using Xero correctly in terms of, or your bookkeeper is, they put the correct invoice there, they put the correct due date, you basically get the report for the due date. It's Friday, it's your payroll, it's your payables day. Just pay the ones that are due now, and then pay the, in the next fortnight, the ones that are due by then. So just those two changes sometimes can make a big difference to your cash flow. Try it out if you haven't already, if you already don't do these things. The other important thing is having that monthly cash flow meeting. I'm just going to show you a template that we use for our clients, and happy to talk about. I'll be going into detail in that one as well. Okay, so this is a really, really old one. Okay, so what we do, and this is something easy for you guys to replicate as well, so feel free to use it. There's no problem on that. So what we have been doing is we kind of create this Excel spreadsheet where we have the daily cash flow. So at the beginning of the month, what we would do is we'll just put whatever is the opening balance as of, say it's May, as of 30th of May. And then we put here so that's the three bank accounts there, 2 bank accounts and a credit card. And this is interbank transfers, if any. Now here is check account receipt, is where we put all the money that is coming in, that is expected to be coming in on what date, right? So hopefully the people pay you on due date. You can put it there. If you know the style of your clients to pay, like there could be clients where you can say 7 days terms, they'd still pay you in 30 days. You just assume that's going to happen in 30 days. So make it in a conservative form as well. And then whatever payments are going out of that bank account, the payroll, ATO, rent, everything, most of the businesses will have 80% expenses that what's going to happen. 20% are surprises and shocks, right? So having something like that at the end of the month, along with the reports I'll talk about from Xero, it can give you a good grounding and understanding of what to expect. So for example, for this client, anytime there's a negative here, MasterCard's fine, but anytime there's a negative in the check account, that's a trigger, right? That's a trigger. Either delay a payment to a supplier or contact a customer to pay early, like something like that. So, but if you don't know that, the overdraft is coming, you can't make those decisions. You might not get into overdraft situation if you can time your payments accordingly. Cool. The other thing I would like to share here also is one other thing which has really helped some of our clients to improve their cash flow situation is timing their BAS and super. Okay. So what I mean by that is sometimes, and again, this is very much common in some of the clients, and again, we are humans, everyone's different, the way they deal with it. So there's a couple of things here. So if you lodge BAS quarterly, pay super quarterly, but you do have a process where you put money on a monthly basis aside for your GST, for your payroll, for all the provision, your payroll tax, for annual leave. There's so many provisions. There's so much on your balance sheet, those liabilities that you can have to pay whenever, right? So if you do have a good method and process where you do put money aside and it's been working fine, you don't have to make any changes. However, some people, you'll have to actually forget that money, okay? But however, there's sometimes we are in a situation where we have to use the money, so we do draw that money out, right? It can happen. It'll happen to me, it'll happen to you, it'll happen to anyone when we need the money. So what some of the clients preferred to do, and that's what they've done, is they've moved to paying monthly super, they've moved to paying monthly GST, and one of the clients, they didn't even move to the monthly super, they actually pay super. As soon as they process the payroll, they lodge their single touch payroll, they pay their super. So everything kind of happens in one go. Then they understand the cost of the employees. But sometimes what can happen is if you only process payroll and process super at the quarter, you don't feel that that was the cost of the employment, but that is the cost of the employment. So choose out of these options whatever works for you. You can, if you're already on quarterly, you can move to the monthly BAS, you can move to the monthly super. It's your choice, right? If that helps you manage your cash flow, do it. It'll be good for you. It's only the transition time that is hard. That is kind of hard at the moment, the transition time, where you'll have a December quarter to pay, and if you start from January, in January month to pay. But long term, it's good. I mean, obviously at the moment, due to pandemic, we're obviously all getting affected by cash flow. This is another thing I really want to make a note. Don't think this method is only for businesses who are doing okay in pandemic. There are, in pandemic, what we have experienced are really two types of businesses. One who has already been affected and they are getting job keepers and all of that support. Put those in the cash flow statement as well, because that is money that you will be getting from the government, and you have to pay the job keeper. You still have to manage your cash flow statement, whether you're in that situation or not. There are these other type of businesses who are still doing okay by God's grace, but they will get impacted. We all know that every business will get impacted at some stage, right? Some has already got affected, some will get affected in the next few months perhaps, right? Or when the job keeper finishes. So the policy at the moment needs to be, I'm not saying be conservative, spend and invest on stuff, and that's what's going to run the economy, but do a lot of provisional savings as well. If you are a business, you have been cash flow healthy in this time, well done, congratulations for that. Please do some savings for your business if that's possible. Cool. So that's about, the importance of cash flow, and we all can testament to that. Now, before I show you the Xero reporting, what I want to talk about is what are the things you want to do before actually starting to do cash flow meeting and cash flow reporting in your practice, in your business, whatever, irrespective of the nature of the business. You want to make sure the bookkeeping is being done correctly, okay? Whether you're doing your own bookkeeping, or you get it done by a bookkeeper, or you get it done by an accountant, or someone who, who does not have a bookkeeping background, you want to make sure the bookkeeping is done correctly. That is the root of your tax returns. That is the root of your management decisions. So a correct bookkeeping is super, super important, right? You want to make sure the allocation is done correctly. So many times we will see a client purchased, something small, maybe a calculator. Because they're not sure, they will put that into office equipment, but that's not an office equipment. It's a small $100, $200 expense, right? Whereas sometimes you see there's a $20,000 equipment which has been expensed, which should have really been an asset. So just making sure that things are getting allocated correctly to the correct chart of account and GST is really, really important. Again, we all know garbage in, garbage out. If we don't put the right information into our systems, the reporting we get is not going to be reliable, and we can end up making wrong decisions. Okay, the second point is understanding the goals. What is the goal of the business? Do you want to, you might have a goal where you think that, all right, I've got everything here in my business. For next year, I'm not doing any more spending. And my goal is to make sure that my business bank account has $100,000 there for those provisions. That could be a goal. So depending on your goal, you can do your reporting. But having some goals is a good idea. Then monthly review of profit and loss and balance sheet. I have seen most of the businesses do keep an eye on profit and loss very closely, but not balance sheet. Balance sheet is equally important, right? And balance sheet is where, when we review the bookkeeping files, sometimes we get the files to review for health check. Balance sheet is the first document we check, because that's where people, if they're not doing the bookkeeping right, they actually hide stuff in there, because that's one document that can get ignored by business owners or whoever. Cool. So you want to make sure you've got your profit and loss and balance sheet intact if you want to look at your cash flow reporting. Cool. I'm going to show you the dashboard now as well, just this, so keeping an eye on dashboard is super, super important in Xero. I'm just going to share my Xero screen with you all now. Dashboard gives us a lot of information if you look at the right things. I'm sure you all are aware of it, but that's the webinar is about cash flows. I have to talk about it. So this is your dashboard, right? First of all, I want to say that if you ever want to change your dashboard a little bit, you can just click on this edit dashboard right at the bottom, and then you can change things, right? If you don't want to worry about invoices owed to you, you can move it down or you can hide it, okay? If you don't want to know about savings account, you can hide it, okay? So you can change things there. Make it according to your needs. So a bookkeeper's need would be different as compared to a business owner's need. Tax accountant need for dashboard would be different to a bookkeeper's need. So just do what is right for you, right? What are the things that you need to see? When you look at the dashboard in Xero, it gives you so much information. Again, if the bookkeeping is done right? Sorry, I just keep talking about it. So just by looking into it, I know that my business has got about 10 grand, right? So there's a $4,000, $4,200 in my business bank account, and there is $6,800 in the savings account. So I know that's how much money I've got. I know that in next few weeks, I need to pay $8,500. I know that in next few weeks, I expect to receive about $16,000. Okay, that's a quick snapshot of my cash flow that I've got just by looking at the dashboard. Okay, I also can see what has happened. So in October already, the money that has come in is 8 grand, and the money that has gone out is $20,000. So they're two different accounts. So straight away, that has given me that that summary of what money has come in. So in the blue one is the money coming in, and the gray area is the money going out. So I'm deficit by $11,800 in October, but that's just by hovering my mouse around it. Okay. My mobile app is not working today. Otherwise, I was wanting to show this to you guys on the mobile app as well. But on your Xero app on your phone, you can actually see those figures there. So it was really funny. I was once showing, one of my clients was on MYOB, and when I showed them on Xero, and he was just excited that he doesn't have to log on to the bank to see the bank balance, which is quite funny. It's quite cool as well. So anyway, so you can actually see the gist of your business just on a bit of, hovering around, your cash flow on the dashboard. Cool. So that's what I wanted to show you on the dashboard, right? What I'm going to talk about now is I'll just quickly share my slides with you now, so you know what we are going to talk about in next 15-20 minutes. All right, so there's two built-in reports. One is called short-term cash flow, one is cash flow statement, and then how do we create our own report? Cool. Cool. So I'm just going to share Xero again and have a quick sip of water. Okay, so inbuilt in Xero is a short-term cash flow report. Okay, don't get excited. It's not the best. Okay. So what we're trying to do through this webinar is we're trying to see what we can best get for your business, considering that Xero is a little bit rigid in terms of cash flow reporting. Okay. Now, there are a lot of add-ons as well, which can actually help you in cash flow projection, right? However, those webinars I haven't created yet, so those webinars are yet to come, but this is more with what you have, right, in terms of systems and what you can do in terms of your cash flow reporting. So this is short-term cash flow. When you go to business, you'll find that little thing here. Now, what it does is you can select both the accounts, or you can just, select one of the accounts. I've just said these are the two business accounts I've got. So this is my balance as of today, and I just want to look at the 30-day summary, okay? And what I expect is, now, these are invoices owed to me. Now, this must be due within the 30 days for it to be there. So what it is telling me is in next 30 days, it expects me to receive 8,900. It expects me to pay 6,100. And that would be the bank balance as on 15th of November, right? So this is good, right? This is good for a quick look. However, if you notice, this does not talk about my BAS payments. This does not talk about my payroll payments. This does not talk about my cash flow boost that's coming in. So it's obviously incomplete, but this is something really, really basic that they have done, Xero has done, which is good. I mean, it's a good, quick one. And if you do 7 days, it'll show me about 7 days, right? So that's all it has got. I'm just going to open up all the different reports in different tabs, and then I'll talk about different information from different reporting that would help you creating the reports. Now, there's a cash flow summary report in the report section. That is more of a historical one, right? So when you have to, so this is a common thing that we study as well when we study accounting, that when you are doing cash flow projection, you do look at the history as well. So if you're in October, right, and you're planning for, say, November, December, January, you do want to look at what has happened in, say, August, September, October as well, because that's important. If something was paid, more in the last 3 months, if something went wrong. So if you can consider your mistakes and stuff in that meeting, so it does not happen in the next 3 months, that's a good learning as well. So everything is important when you talk about cash flow. So this is historical, right? So this is already has happened. You don't have any say like this is, so I've received this much from the customers. These are the payments that I've made to the suppliers, and this is the money that I've paid for other operating activities, right? So this is already done for, okay? So that's my net cash flow for the period. If you remember, when we were scrolling around, we were down by 11,800. That's why it's in negative. Cool, so this is just a bit of more description, okay? Cool, so the other report that I'm going to start here is going to be my payroll report. So I'll tell you why I'm doing this. I'm just going to do it for last month because that's the finished month. Cool, and then I'll just go to the balance sheet as well. Alrighty, let's do it. So end of last quarter. All right, so what I want to talk about here is every report in here is giving you some information, but it would do your head in, right? You can't make your decisions on this basis. This is too confusing. It would do anyone's head in. So what you want to do is you want to create a spreadsheet that works for you. I'm sorry, that's probably the best way you can do it. Or you can print these reports, like if you're not a spreadsheet person, if you don't like spreadsheets, you can probably print this report and, somehow make it, in writing. Or if you can, the best thing would be to use a third-party add-on. So the most popular third-party add-on for cash flow statements is Floyd. We haven't done the webinar as yet, but that is coming. But I'm going to talk about the spreadsheet, okay? So let's just go to our spreadsheet here. Now, this spreadsheet, if you look at it, it is obviously quite involving. That work is quite involving. If you want something just to give you an idea for the month, right? So we went obviously crazy, right? This is daily cash flow. Not everyone does daily cash flow. What you can do is, sorry, let me go to the end of here. Say, for example, let's just make it as a month, right? Say, for example, you just want to do it like a monthly thing. So May 2020, just assume this is for the full month. You just put here how much money you had in May 2020, like 1st of May. You put here what is your expected receipts for the month of May. And then here, what you can do is you can use the figure from that short-term cash flow report from Xero, where it tells you what money you expect in the next 30 days. You can put that figure in here. Say, for example, you expect 50,000 to be received, right? Now, other than that, what I would do here is also add here any government grants. If you look here, what we were trying, you can also do is you can have different, so here, the gray is used for check account, yellow is used for savings, and orange is used for MasterCard. You can do the same sort of thing, or you could do different coloring for money that's already in the bank, incoming money and outgoing money, and then the bank balance. Do whatever you like, but that needs to make sense to you so that you have a look at it and you can just make decisions quickly. This could be something you can go through it with your bookkeeper and then come up with the right spreadsheet that works for you guys. Okay. So government grant, say for example, you've got 5 staff members and you expect to receive 15,000. I know it's reduced the JobKeeper, but let's just pretend that's what it is. And you're not expecting any money in the savings account. Again, for the month of May, you know how we did that payroll report? You can just say, there's a $10,000 payroll that needs to be paid. Super and tax. The reason why I put super and tax in these cash flow planning is so either you pay it straight away, okay, or you put that money aside, okay. So let's just say it's $950. Oh, there's tax as well. Let's just say it's $1,200. So tax and super. Any insurance that needs to be paid in the next month? No. Any accounting fees? Yes. Like just put some stuff in there, whatever is going to happen in the next month. So do it for 2-3 months. You don't have to do the daily cash flow the way we showed you. But where you want to get these figures from is your Xero. So all the expenses you can bring from, your short-term cash flow where there were bills and invoices, and you can use your profit and loss as well, right? And of course, balance sheet for your liabilities. So when I talk about balance sheet, I'll quickly go back to Xero again. I hope this is not boring. I hope you're finding it useful, guys. Okay. So normally, what should happen again if the bookkeeping is done correctly? These are all your liabilities as of 30 September, right? Not yours, demo companies. So this is what you would expect to pay if your GST account is correct. So this should be your BAS for $2,300 should be your BAS for September quarter plus PAYG withholding, right? So that's your GST and that's your payroll, the tax for your staff, the PAYG withholding. So you know that that's what you're going to pay in October or November, depending who is doing your BASs. So the information from your profit and loss, balance sheet, and your short-term cash flow, and the cash flow statement, these are the reports where you're going to get the information and you're going to collate all the reports.